Así pasa.
Sí, ¿no?
Mi hermano mantenía como correspondencia con un político, pues digamos, tan
Sí, bueno,
pero no sé qué. Cuando fue a Argentina y lo conoció, le pasó eso, que le dijo, oh, le dan la sola. Y se quedó así. Sí, a veces como.
Yo ya lo veo normal, pero 2, no 3. Sí, ¿ya?
3 en su por eso les pregunto.
Sí.
Ajá.
Ay, ¿cómo sabías?
No puedo hablar.
No, todo no. Cálido, vamos a ver. Cálido, a mí no me conviene que sí nos deje sin nada. No creo que.
Y si quieren pueden pasar a hacer.
No creo que harían como mucho. No se me hace como mucho.
Ya está todo ahí listo para
Son muy
servicio.
delgados para comer mucho.
Pero sí como.
Pasen, por favor. Chris, you should take something to eat, if not.
I'll get one later, maybe. And then I'll be getting food out. Bueno, provecho.
Sorry.
I don't know it well, but I've been there.
Well, her father grew up in Athens. His father was her grandfather. That's her Georgian.
Bien, bien.
He actually, he then became the head of alumni relations and sort of switched careers.
Hola, ¿qué tal?
Travel a ton.
Yeah.
He was everywhere.
He was in the journalism.
Yeah, his name was Tyus Butler. And then he was most well known for being on the
Yeah, that may be.
he ran he would have been on all the every time he
I gave money when I had none.
Ah, okay.
And now, well, actually, I
I
thought
always
it
think
was
it's
less.
funny, I went to Tulane, and I always think it's funny is they ask us for money, and they're like, so we're gonna do a rebate.
Pero no. ¿Tienen plato por ahí para mí?
Y él estaba.
Él es de Rosario.
Yo lo voy a pasar
Pero él no es por mí.
La ciudad de Chihuahua.
Yo también volteo como güey, que tiene una semana.
Y eso viene a paso a vos, cae en una casa de
Y vas a tomar
Hacen su pistache. Bueno, algunos profesores. Eso sí, ahora nos conviene.
que además de ser un buen artista, lo que escribe inglés,
Es el whisky, no es
Me está regañando por agarrar una de las mismas.
No, me pone para allá para oír bien. ¿Dónde te vas a sentar tú?
Ahí estoy, mira.
Aquí hay el nombre Armando.
Yo voy a dar tuyo.
Allá adelante, vamos para allá.
Voy para allá.
¿Dónde está mi nombre?
Permiso.
Arturo, ¿no te molesta que te corra el Gracias.
Permiso por
Space.
Entonces me lo pones ahí al lado del señor serio.
No, hay otro señor en medio.
Otro serio.
Armando del Antonio, es hermano.
When you start eating, I will start talking.
Ya ves, allá. Tú mira el promedio de edad aquí.
Veinteañeros sabemos por ganarlo.
Yo no lo voy a tirar tanto para abajo, no te creas.
Yeah, I first went in 1970.
Aquí.
Ah, bueno. Che.
No, I was a professor at one at the University of Shanghai.
Aquí está, tú no sabes.
Arturo es igual muy bien.
Este es el abogado tuyo.
Sus padres tenían propiedades en Rosario. ¿Quién preside aquí?
No hay presidencia, you are the president.
No, para presentarme a invitado.
Okay, I will ask you to present.
Well, maybe I should.
Me acompaña el ingeniero químico Baldomero Casas, que fue alumno mío en Cuba, en bachillerato. Y nos vimos en Cuba por última vez hace 56 años.
Can I borrow you if you can talk
Me
to me?
localizó por Interpol y aquí está. Es un gran ingeniero químico retirado. Pero estamos tratando de ver si se enamora de una guatemalteca y se venga para acá.
Armando, can I borrow you to say the same thing almost, but in English? Because we have some people in the meeting that only
English speaking only.
Chris and Ralph.
This serious gentleman. What's your name?
Ralph Mao.
Nice meeting you, sir.
Ralph is from Tulane University. Ralph is from Tulane University.
Tulane. I have been visiting there. Armando de la Torre.
Soy Adrián Lee.
El hijo de Federico. Pero si yo
El papá de
estuve,
Tamara.
por eso yo estuve con tu hija ayer o ayer.
Me comentó, sí.
Y se parece mucho a su padre. Bueno, y las señoritas, ¿quiénes son? Marcela.
Marcela Puerta es una profesora de la escuela. Ella es hija de Leonardo.
Ah, bueno. Ah, bueno. ¿Y el apellido Porta es de origen español o italiano? Español. ¿Y Lucy? La hemos dicho muchas veces.
Muchas veces, sí.
¿Cuál es tu apellido?
Armando, empezamos.
They tell me that I should speak English. You should learn Spanish. If you don't learn Spanish, you don't go into heaven. Spanish is the official language in heaven. Warren is not going to be there, so he can.
Well, sorry because I'm going to talk in English. We want to welcome Chris as our lecturer today. Helmut Chavez, our dean, and Carla asked me to excuse them but, because they are in other meetings. It's not more important than this one, but they can't say no to that, so they will not be with us. Today we have a lot of special people, all of you, so welcome all. And please, Chris, if you want to say something about you,
Okay.
more than you are a revolutionist.
Well, I apologize for not cooking today. Well, you might prefer their food to mine. But
No, I don't.
anyway, I had an arrogance. I had this idea that the place would be overwhelmed with people because of the topic. But then I realized that last year I gave a talk that had the same title. I could have been more original, given it a different title. But the content will be substantially different. Some background. Someone was asking me before, just a few minutes back, about my experience in China. I'm not a China expert. I'm an observer. I'm a frequent visitor. I know something about economics. So this is an interesting thing about economics. It gives economists a special bag of tools and tricks that allows them to go to countries around the world and make a fool of themselves by trying to use these tools to make some interesting conversation. So this is what I'm going to do. As an economist and as an observer of China and Asia in general, I had some ideas I wanted to share with you. And I began going to China in 1987. I was invited by the government to teach at one of the universities that was actually founded as the training center for the Ministry of Finance personnel. So it was very interesting to go at the beginning of the China story. Although it really began in 1978, even by 1987 things were still developing. So I'm an economist. I've lived most of my academic career outside of the United States. Much of it in Asia, somewhere in Asia, and a great deal of time in Europe and South Africa as well. So I've got a number of different sort of perspectives and experiences that I try to bring to bear on all of my sort of research and analysis. So I see China as being in a very interesting situation. Now, having said that, I've been telling this story for about 10 years. And I've sort of been like the English language children's story, Chicken Little, where Chicken Little was always thinking the sky was falling. And I've been this way with China for a long time. I've been very skeptical about the institutional capacity to survive the challenges that still lie ahead of China. I'm skeptical about the capacity of the Chinese central bank to continue pumping air into the liquidity into the Chinese economy that's forming this bubble that I'll talk about. So let's start with a little bit of background. This is sort of the outline I'm going to follow. So a lot of people have perceptions about China. They see in the newspaper, they read data, they go there, as I do very often. I go and you see the magnificent advances. The difference between Shanghai in 1987 when I was first there and last summer when I was most recently there, when I was first there and then more recently, it's very impressive. So I tell people that when I'm outside of China, I'm very pessimistic, as I will be today. When I go there, you cannot help but be impressed by the kind of advances they've made. The difficulty is in remembering that in 1929, before September, the Black Friday as it was then known, when the stock market collapsed, from one day to the next, everything looked perfect. And the next day, people were jumping out of windows. The same thing happened in 2008. In January 2008, everybody was trying to buy houses in the United States. The next day, it all goes up in smoke. So there's perceptions and there's reality. Now the perceptions in China are driven by what I'm going to refer to are these bubble forces behind the bubble. So what I'll be putting up here follows this sort of outline. First of all, I'm going to talk about what we mean by bubbles, what economists mean. And I'm going to put this in the framework of the Austrian business cycle theory. So again, balancing what we know about China and what we perceive about China And everything else that follows is really interpretive of that. China depends very heavily upon export-led growth, and I'm going to criticize that and show you some difficulties with that. To find ways to identify when bubbles occur. Mainstream economists only are able to identify bubbles after the fact. They are incapable of seeing them coming. And this has been a problem with, in fact, the reason is, mainstream economists, in particular Keynesian economics, depends on creating bubbles. And if bubbles are seen after the fact as something bad, you don't want to spoil the party by saying, oops, we're causing a bubble by following our Keynesian economic policies with manipulating interest rates, pushing them artificially low, running budget deficits. These are the things that contribute to bubbles. And of course, they have no incentive to really be able to identify them before the fact. And then I'll look at some of the indicators that I believe show that China's economy is in a bubble. And then I'll look at some scenarios for what, maybe I should call it a correction instead of a collapse. Maybe collapse is too strong of a word. But I think China's economy is in for some serious adjustments. Now, so economists usually think of bubbles as a situation where asset values are exceptionally high. They're far away from the long-term historical trends. So again, these things are somehow conceptual. You know, sort of, you have to have a feeling for it. Alan Greenspan said in the United States in 2006, 2007, there's no bubble in United States real estate. It's not a bubble. There's some, you know, some pockets where you've got maybe in Las Vegas and maybe in some other places, but in general, there's not a national bubble. He had no idea about it. But economists that follow the Austrian economics, Austrian economists, had a very clear idea about this. And we're maybe not necessarily, I began talking about the formation of the problems in the United States with respect to monetary policy beginning in 1997. I didn't specifically say it will manifest itself in the housing bubble in 2008, but Austrian economics provides us with tools to anticipate these. And, of course, even in the face of some of the evidence of a bubble, many economists deny it. Now, so in other words, mainstream economic theory doesn't really help us. Keynes, who many economists depend upon, introduced his idea of bubbles was what I would call pop psychology. Keynes wasn't a great economist. He was a great thinker, very innovative thinker, but he wasn't a great economist in my sense of understanding market processes. He really didn't fundamentally come to terms with that. He was a big thinker. So he'd throw out ideas, test them out, people would react to them, and he would change his mind. You know, he was had a very supple mind, he was a very clever chap. But he talked about animal spirits, or herding, or casino, you know, the stock markets as casinos, which meant he really didn't understand what was going on in markets. So if you don't understand markets, that means you can't rely on economics, so Keynes tried to use some kind of, you know, cheap pop psychology. And unfortunately, these ideas have stuck. Now, herding doesn't describe human behavior. It describes animal behavior. Humans are individuals. If I look around here, everybody's dressed differently. Man or woman. Their hairstyle. We don't herd in most instances in our lives. This isn't the nature of humans. Humans are contrarians. We define ourselves by having different personalities. We do that within family, we do that within groups. So this idea of herding to be what we see is that very often people may behave similarly with respect to the market, but that's only because of external information, in particular, interest rates or access to cheap credit, that induces people to appear to be engaging in these animal spirits or herding. But these are very unusual circumstances. And they're created not by the market, but by some external factor, that is monetary policy. Monetary policy induces people to behave in ways that they normally don't. I mean, how do you make profits? Do you make profits by copying everybody? No, you make profits by innovating. The big profits are made by innovation, not by imitation. Some companies are successful in imitation, but the really, I mean, Bill Gates and Microsoft didn't imitate anyone. They were creating something new. So, I had trouble with this, but that's another discussion. So, as I mentioned, bubbles are necessary for Keynesian economics to work. That really is what is going on. And they don't really explain what happens before the fact. The Austrian business cycle theory looks at, very specifically, as I mentioned, in monetary, what I call monetary malfeasance, that is, misbehavior of the monetary authority. Now, the gringo is truly the great Satan when it comes to monetary affairs. The U.S. Central Bank has done everything in its power to undermine the value of the U.S. dollar as a way of assisting successive U.S. administration prosecute wars everywhere, imperialism in one form or another, and massive government deficits. So this is really what the central bank is doing in the U.S. And the tragedy of this is that every other central bank follows, not in a coordinated manner, not in an agreed upon manner, but in fact they move in pretty much the same, in tandem with one another. So if the U.S. lowers its interest rates, everybody else does. They do that because they don't want to have their currencies becoming appreciating that would interfere with their export competitiveness. So at the heart of bubbles is not government policy per se. Government regulations and laws can make matters worse, but they don't cause bubbles. The fundamental cause, if you take away the excessive liquidity that was started in 1997 and ran through the dot-com bubble, the year 2000, pumping of liquidity into the market, up until 2008. This was all about excessive monetary supply, interfering with the functioning of the market. You take that out, there would not have been a bubble. You take that excess liquidity out, there would have been no housing bubble in 2008. There would have been no dot-com bubble in 1999, whatever it was. So, the fundamental cause of bubbles, and you can see this historically if you go to the South Sea bubble, the Mississippi bubble, the Dutch tulip bubble. All of these, you can trace the origins of those to monetary malfeasance of some form, either because of the Treasury or in later years central banks. So what's going on here is that the creation of credit, creating something out of nothing, that is pumping liquidity into the system, combined with a fractional reserve banking system, which exacerbates this. You put the monetary interest rate below the Wickselian, well, Knut Wicksell was a Swedish economist that contributed ideas that had a big impact on the Austrian economists. And this is the source of what we call malinvestment. These malinvestments are what Keynes referred to as herding, in a sense. But we have this is an economic way of understanding. These malinvestments are investments in capital enterprises that will be unsupported by economic realities once the interest rates go back up. So if you have a bad business model, one that where you couldn't repay the interest on your debt, if the interest rate was, say, at 5%, but if the central bank pushes interest rates to 3%, you're in the money. You go and borrow money. Okay? The problem is, if interest rates and when interest rates go back up to, say, 5 or 6 or 7%, because they usually overshoot to correct the past mistakes, you're out of business. You become illiquid and then eventually insolvent because you're unable to repay your debts. So this is what a malinvestment, so this is an economic explanation of this kind of bubble behavior. We don't need pop psychology for that. So regulations and legislation do not initiate and they can't stop bubbles because bubbles are based fundamentally on these credit expansions. So, so bubbles are predictable and inevitable once we have this monetary malfeasance. Now, I think we're in a number of bubbles. We've got a bubble in gold, it corrected a bit. Bonds have been the whole problem in Greece and Portugal, Spain, much of the Eurozone, is about a bond bubble blowing up on them. But this had a lot to do with some other factors. Stocks in the United States are in a bubble. That is, asset values are being artificially supported by excess liquidity created by the Federal Reserve System. And China is the big bubble. And that's what I'm going to talk about today. So, okay, here's some information about China. You know most of this. From 1979, when Deng Xiaoping began to modernize China, including the economy, the average growth rate has been about 8.5%, which is very impressive. It's not unprecedented, but it's Hong Kong, Japan, Singapore, some of these others, they had similar growth rates. Maybe not quite such a long period, but we've seen things like this before. China now, according to some people, many people are impressed by this. They say, wow, look at this foreign exchange reserve in China. This is an indicator of a strong economy. This number terrifies me. This is the indicator of how massive the imbalances are in China's economy. These foreign exchange reserves are, in a sense, an implicit tax on resource owners in China, especially the workers. Because we'll talk about this in a moment, what foreign exchange policy do you pursue if you want to expand your exports? You keep your exchange rate artificially low, right? You do whatever it takes to keep your exchange rate from appreciating. Now, what does this mean? Well, let's imagine you go home and tell your partner, your parents, or your friends, say, I think what we should do in this household, we should pay more for everything we buy, and for everything we sell, we should sell at a lower price. I think you're nuts. But when governments implement this as a policy, it's supposed to be intelligent. Now, how is it that the individual household would see this as a ruinous idea, but governments see it as something intelligent to do? So what this means is that these foreign exchange reserves are effectively a tax that's been imposed on the resource owners in China and being held as green pieces of paper or U.S. Treasury bonds that are denominated in dollars that are a depreciating asset. So this number terrifies me. The larger it becomes, the closer I believe China is to having a serious economic correction, because this is symptomatic of massive internal macroeconomic imbalances. I got ahead of myself there, but I was just going to give you the positive news. So it's the second largest economy by some measures, up to 15% of global GDP. Much of global GDP growth, 10% of all global trade, up significantly from a decade ago. You all have experienced and observed how that's happened. Chinese companies are expanding, becoming larger. They're not quite household names yet, but we're beginning to see. Now, here's the takeaway number everybody talks about. China is going to overtake the U.S. according to The Economist by 2018, the International Monetary Fund 2016. The Chinese are very humble. They say, well, they waited for other people to give their numbers, and then they pretended like they were didn't believe it. But so here's what we've seen with China. It's a mixed picture, but we've got this is the percentage change in GDP, and it's been in the neighborhood of double digits a number of times. And its worst performances would be, most countries would be happy to experience 5 or 6% growth. So it's been very impressive. It's true. But let's see, as part of our mixture of perceptions and reality, I'm going to make a general proposition. Now, I can't remember now if it was Aaron Director or Stigler no, it was George Shultz, former Secretary of Treasury, famous for saying this. Anything that cannot go on forever won't. General proposition. Now, that's a good description of a bubble. Anything that cannot go up forever, bubbles pop. Now, so this is not only an economic aspect, but as we'll see, it also has political importance. So these phases of China's very high economic growth. Now, if real economic growth is 0.85% on average, that means that the nominal rate of growth had to be about 20%. Now, if you tell people that, you tell an economist, they say, can you imagine that it would be likely or feasible for a country to experience 20% nominal economic growth for 30 years? Somehow we find that very difficult to believe. So China's performance is probably overstated in some way. That's part of what I'm getting at. Now, what we learn from Austrian economics is that monetary malfeasance, monetary misbehavior, excessive pumping of money into the system or artificially cheap credit leads to a boom and bust cycle. And bubbles are embedded in that. Now, in terms of political theory and history, and this is where China's dictatorship, like all dictatorships, are very fragile. This is why the Chinese will even break up a meeting of people having a Bible study if the numbers are more than 10 or 15 people. They're terrified that if even small groups get together to discuss religion, that this could balloon into something that would threaten the stability of the Chinese Communist Party. In the long run, they're unstable. Why? They don't have safety valves. Democracy, like in India, you can join a political party if there's economic unrest or if you're dissatisfied. You can start a new political party. You can demonstrate on the street. None of that's available in China. Okay? Demonstrations occur, but they are either illegal and suppressed or they're tolerated because they feel like they can control them. The problem is, if there's serious economic unrest in China, the dictatorship will unravel. And dictatorships don't like to unravel. Some of them go peacefully, but many of them, as a way of distracting citizens from domestic problems, start wars. And that's where I worry most about China, because it could be a very unfriendly neighbor. It's got unresolved border disputes with every neighbor, including an entire state of India. All of the South China Sea is is contested by China against the claims of Malaysia, Vietnam, Philippines, even Indonesia. So China could be a very unfriendly neighbor if things get bad. So the question is, if we take the general proposition, will China become aligned with these economic and political realities? And I suspect they will. Now, to understand China's economic conditions now, it's useful to look at Japan. Because this is how I was able to write a book in the early 90s projecting that the East Asian economies would suffer the same consequences of Japan, of having overinflated economies that would pop. It happened in Japan in 1989. I learned from what was going on in Japan by looking at the Japanese growth model, saw the East Asian economies trying to pursue the same course, export-led development. And I said, well, this will happen. And of course, it did happen in 1997. So Japan had very high rates of growth. It had average growth of about 6%. It's less than China's. China was 8.5% for about 30 years, right? And wow, look at this. What did we just say about China? China's going to overtake the U.S. It was estimated that Japan was going to overtake the U.S. by the 1990s, maybe earlier. What happens is that people tend to extrapolate. What happened in the past will go on forever. It doesn't happen that way. So the reality is that Japan was in the 1960s and 70s, the 1970s, Ezra Vogel and a lot of other people going, the Japanese are going to take over the world. They were buying up Palm Beach golf courses. They were buying the Rockefeller Center, these American icons. Yeah, they bought them. They bought Pebble Beach, I think, for $500 million, sold it for $200. They bought the Rockefeller Center for $600 million, sold it for $200. But that was, of course, after the fact. So what we see is that there's historical evidence where these projections of perpetual success and high performance, as we saw in Japan, and as we saw later in Indonesia, Thailand, Taiwan, South Korea, they can hit some bumps in the road. After 1989, Japan's bubble economy blew up in its face. Japan was exporting like mad. It was bringing in foreign exchange. It was being converted into yen. The yen began to circulate in the economy. It goes into the stock market. The stock market bubbles up. People use stocks as collateral to buy land. Land bubbles up. They use collateral. They use the land, the inflated value of the land, as collateral to buy stocks. And you've got this circle going where at one moment the land under the Imperial Palace of Tokyo, the Imperial Palace in Tokyo, a nice piece of land, was estimated to be worth as much as all of the real estate in California. And people talked about that as though that was serious, instead of going, my God, this is crazy, which is what I was doing. But other people said, oh, then I need to buy land in Tokyo. Just like the same people in the United States were trying to buy land and, houses in Las Vegas in 2007, 2008. Instead of saying these prices are wildly out of proportion to historical trends. Japan's economy went into a downward spiral. It hasn't fully recovered since then. Its long-run average growth rate went, in that 30-year period, from 6% since 1989, has been roughly 1.5%, 2%, with lots of recessions. Okay? So, the urban real estate in China fell by 2/3. The stock market, the Nikkei index, fell by 2/3. It hasn't recovered. It's not even close. Nikkei went up to 35,000, and now it's roughly 10,000. I haven't looked in a couple of weeks. So it's still way off of its peak. Surplus capacity destroyed profits in these firms. Stock market, urban property lost about 2/3 of its value. So my question was, well, and this is relevant to China, because China wanted to imitate Japan's success. They wanted to export their way into becoming a modern industrialized economy. And my answer was yes, I thought it would be true. And I was right in projecting what would happen in East and Southeast Asia in 1997. So I used this logic to write my book that was called The Rise and Decline of the Asian Century, that preceded the collapse of the East Asian economies. So I'm sorry I'm going so fast. I've got a lot to say. But export-led growth is at the heart of the problem for China. It's what I call neo-mercantilism. Now, Adam Smith said mercantilism is stupid. Trade is not a zero-sum game. Trade is a positive-sum game. And Smith told us, and I still believe he's right, the primary advantage from international trade comes from importing, not exporting. Because what happens is, if you import, everyone in the economy consumes goods and services at the lowest possible price. All your producers source inputs at the lowest possible price. And local producers are forced to compete with global leaders so they can export. So in a way, you could almost say it's a chicken or the egg question. I'm saying it's the egg, and that it's import. And this is what Smith told. So I think believing that exports are the best way to grow, because if you look at India, for example, India's had very high rates of economic growth recently, and they don't depend heavily on exports. They focused on developing the domestic economy, and they got very good results from that. Okay, so there's some counterpoints to this. Now, I also don't like mercantilism because it was the excuse for imperialism and colonialism. The absolute monarchs of Europe said, well, you know, if we lose our wealth, our gold stocks by importing, it'll work better if we go out and take over all these countries and we've got a captive, you know, sort of audience for our products. And we've got resources, and the Spanish, of course, could steal the gold and so on, but mercantilism was the basis of European colonialism. Now, that's another reason I didn't have an allergy to this idea. Now, why did Japan succeed when they did from the 50s till 1989? I say it's happenstance, circumstance, and luck. First of all, think about it. Who was competing with Japan for these markets? Japan came in, first of all, with toys, ceramics, cheap tools, and then they began upgrading slowly but surely. There's nobody to compete with them. China was autarkic. Soviet Union and its whole empire was autarkic. Latin America's on siesta. Right? Africa, nothing going on there. Middle East, where? And Europe is rebuilding. So what we find is that Japan really had a unique position there. So why wouldn't export-led growth work in that unique position? So I'm suggesting that it's not a model. I mean, if we look at Japan, we should be careful assuming that it's a model. Now, what happened, and the other thing, there are other factors here, there are geopolitical factors. The gringos and the Europeans wanted Japan to recover and to become a strong economic power to balance against China. So any sort of political resistance for imports from Japan from industrialists or trade unions would have been kind of pushed aside. You say, well, you know, so for geopolitical reasons, the West wanted Japan to become stronger, so we were more willing to engage in trade with them and less likely to impose restrictions on them until they got too good at what they did. And that came later. But by then, what we see is that East and Southeast Asia, they said, well, look at Japan. This is our model. They tried to follow Japan. Now, of course, they started in the 1970s, 1980s. We began until the 1990s. We see the rise of Hong Kong, Taiwan, South Korea, Indonesia, Malaysia. We begin to see these countries trying to compete with Japan. And now Japan's markets are being contested. I remember one of my Japanese colleagues said, you guys stop complaining about us. It's not about us. It's those crazy Koreans. Sure, we work 60 hours a week, but they work 80 hours. You know, leave us alone. And so, of course, we see now, Samsung and LG are eating their lunch. Sony, Panasonic were downgraded to junk status just yesterday by Fitch, I think. So anyway, but that's now. So what we see is that Japan created its own bubble with its monetary policy, which was supported by its industrial policy, which was export-led growth. So the Japanese government provided subsidized interest and special privileged access to loans for export-oriented industries. And so what we saw is that Japan's economy became very sort of out of balance. The foreign sector, the international sector of Japanese economy was privileged and had access to resources. The same thing happened in Korea with the Jabol. The same thing is happening now in China. The same thing happened in most of these countries where they believed that exports were the way to go. Now, I'm not saying that exports are bad, or I'm just saying that if if you create an industrial policy based on that, it's going to cause distortions and imbalances in the economy that are going to come back and create problems in the future. Now, the success of export-led growth, well, it succeeded in Japan's case partly because of the peculiar circumstances. In Japan's case, we had artificially cheap credit. It's repeated almost everywhere you go. Thailand, I was in Thailand in the mid-1990s. It was a boom economy, much like China is now. They were discussing putting toilets into the taxis because the time from the airport was so long that they were worried about their customers. You know, it was a 3-hour ride sometimes. They were putting in microwaves to feed them. It was crazy. That was in 1996. In 1997, bang! It all stopped. They've recovered substantially, but anyway. So we see these things happening. Commodity bubbles, sovereign debt bubbles we have now, in particular, stock market bubbles. So what happened is that these early stage comparative advantages, or competitive advantages from globalization, transition to these capital markets, global capital markets, provided a base, and all these countries have a substantial base. I was giving an interview this morning. There's two sides of this story, whether we're talking about China today or Japan in the past. The good side of the story is that they had the good sense, unlike most Latin American countries, with all due respect, the good sense to be open to globalization. So China would have had a very good performance simply by doing what they did. But what happened is, like in Japan, they created this, they exacerbated the problem by having monetary policies that pumped a lot of air into the economy. So instead of having, I mean, China might have had a much better long-term performance if it had grown at, say, 6%. Because there's several percentage points of China's overall economic performance that's unsustainable. It's a bubble. So high growth rates are not a miracle. They happened before. Germany had its post-war miracle. Japan had its miracle. Southeast Asia. So what's happening in China is not really a miracle. Most of it's from capital accumulation. In China in particular, this is what's happening. And we'll see it's unsustainable. So imitators of Japan's export-led growth will also fail. Well, maybe that's too strong. Are likely to fail. Okay. East Asia bubble in 1997. Now the good thing is that they've had a fairly robust recovery. China is hard to date. I don't know when it'll occur. So let's see, how do I know it's a bubble? Or why do I think it's a bubble? Well, the most interesting indicator to me is loose monetary policy. That is, you're either printing money, literally, or using the fractional reserve banking system to push money in the system, or you're making credit artificially cheap, or you're engaging in some idiotic thing called quantitative easing, or Operation Twist, or large-scale asset purchases, or, in other words, pumping more air into bubbles. Okay? So, monetary and credit policy in conjunction with expansionary fiscal policy, because in a way, this leads that. Central banks were invented to finance wars, imperialism, and overspending by governments. That's what they're invented for. That's what the Bank of Sweden, the Central Bank of Sweden, which was an early one, of course, Bank of England was the first one. That's what they were there for. And they still do the same. They tell us differently, and we teach our students differently. But the reality is, interest rate policies today are driven by the need, the perceived need, for governments to run massive deficits. If the U.S. government had to pay 3% interest, which is the long-term average of interest, or 5%, they'd have to stop blowing people up in Pakistan with drones, which would be a good thing. They would have to stop running these massive deficits. And in the case of China, they would have to stop using this money to support inefficient, zombie state-owned enterprises that are kept alive on this infusion of liquidity. So, the mispricing of risk, which is a global problem right now. I tell people all the time, if I had asked my professors of monetary theory when I was a graduate student, so I think it would be a good idea for central banks to have a policy to keep interest rates almost at zero for very long periods of time. What do you think? They'd throw me out. I would fail the course for having such a stupid idea. This would not have been taken as a serious possibility for the future. But what do we have today? Japan's had a zero interest rate policy on and off since the mid-1990s. And now the gringos got the same thing. And it's taken seriously. Instead of seeing something as being destructive, which it is. So, and the destruction is through the misallocation of capital. High economic growth rate is widely and uncritically accepted. That's going on in China. Again, Japan was going to grow forever. Everybody believed it, except a few idiots. China's going to grow forever. Sorry, it's not. Not at those rates. And the problem with China is not that that the economy is going to collapse. All that has to happen is that there has to be a decrease in the rate of increase. So instead of 8.5%, if they go to 6.5%, that is not going to work for China in terms of domestic, political, and social stability. The amount of unemployment and misery that would come with that, China cannot possibly, I don't think that the government would survive that. So it's only a decrease in the rate of increase. So if exports, the last quarter they ran the first trade deficit since 2008. It's a small one. It's only like $80 billion, which is, by the way, about the size of Guatemala's GDP, I suppose. But it's small for them because they've got a $3.3 trillion surplus, of foreign exchange reserves, right? So, no problem, right? No, big problem. I'll explain that in a moment. So, investors and authorities are overconfident. Prices are paid. So people are going into Tokyo paying exaggerated prices for property. They couldn't wait to buy an apartment at 10 times the value a few years before. These are signals. And we'll see in a moment that this is the problem in China. Rising conspicuous consumption. I knew the game was up in Japan when I read an article where a journalist went to lunch with a Japanese industrialist. And when the dessert came, after they'd had a $2,000 Chateau Margaux wine, and the waiter came with a machine that was putting something on top of the chocolate dessert, kind of like these machines with Parmesan cheese, right? You've seen that in an Italian restaurant. The guy said, "What is that?" He said, "Oh, it's gold." Putting a sprinkling of gold in it. I said, that's it. Japan's story is almost over. So when you get to these levels of conspicuous consumption, where you're buying up Van Goghs at wild prices, you're paying, in China, the domestic art market is just going through the roof. They're paying millions of dollars for these domestic artists. A few years ago, you could have bought their paintings for almost nothing. All the best liquor, the 25-year single malt scotches, they drink it like water. They don't. So conspicuous consumption is a signal that people are spending money that probably won't have the same value in the future. They won't have access to that. That's sort of a psychology, I think. Exceptionally high rate of increase in valuation. So, where we might have had a rate of increase in valuations of assets, whether it be stocks or whatever, it gets very much steeper. And this is the case in China. Of course, China's got, in any given year, the stock markets in China will be the best performing or the worst performing. Just wait a year and it'll go the other way. They're extremely volatile. So they'll have the worst performing stock market index in the world, 1 quarter or 1 year, and then they'll have the worst. It's amazing how they... Now, China's bubble. I call it the mother of all bubbles, taking the famous expression from Saddam Hussein. It's a debt finance bubble, and I'll give you some evidence of this. So China's sitting on massive malinvestments. These malinvestments are purchases of capital equipment that will become either valueless in the future or be valued at extreme discounts. Now, the Austrian School of Economics is very useful in understanding reality, because what the Austrians tell us is that there are subjective values of all things, including, of course, capital. So even though there's physical capital, you say, wow, that's valuable. But if the market goes the other way, the next day that factory that was so productive and had orders, the next day they closed. Literally, this happened in South Korea in 1997. Factories that from one day to the next, they closed the factory. The subjective value of capital is a very important thing for us to understand reality. So I used to live in Luxembourg, and I would drive frequently to Paris and go past these beautiful steel mills in the Lorraine region. They were massive. Enormous amount of capital. These brick buildings with beautiful ornate facades and all. They're closed. Zero value of that capital in that form. So this is where I think Austrians have a better capacity to understand reality, by having that capacity to understand that capital, the physical reality has nothing to do with the economic reality, because ultimately that's determined by the consumers or the buyers of that ultimate product, that's produced. Now, in 2008, and after the blow up in the U.S., China embarked on a massive fiscal stimulus. Now, many people say, China saved the world economy. Now, partly because this massive amount of spending went into Louis Vuitton, Chanel, Valentine, or whatever, and trigo, soya and coal and palm oil from Indonesia, iron ore from Australia, Argentina got a lot of it. Okay? But what China did was export its bubble to other people. I mean, look what happened in Argentina. Argentina, until like two years ago, the economic growth rate was 9.5%. Everybody loved to see it. Now, even though the Chinese are still in the market, they're almost in recession. It's not negative, I think, but there's less than 1%, plus a high rate of inflation, consumer price inflation. Now, if you pull China out of that picture, Argentina's toast. It's done. China pumped it up, but the massive misbehavior of the Peronistas and crazy Cristina have made it impossible for Argentina to survive. But the good news is, Juan Carlos Kaczynowski says, economies are politician-proof. Now, he's a great optimist in that regard. I prefer his story, but I think mine's right. So anyway, so China throws, now look what they did. From 2009 to June of this year, Chinese banks issued about 35 trillion yuan. Now, this was huge at 4 trillion. Okay? There's liquidity of about $5.4 trillion in new loans. In other words, 73% of China's GDP in net new loans, not total, net. So imagine what would happen in Guatemala if all of a sudden there was 73% more money being loaned out by the banks. That would look good, right? But would you think that that would be sustainable? You say, well, what's behind that? Was it increased productivity? Was it increased industrial capacity? No, it's just money. It's just pieces of paper. Okay, now, 2008, it just goes up and up and up. 17%, the equivalent of 17% of the U.S. economy in these new credits. Now, fixed asset investments in China are up by 21% in the first 10 months, and they've been going up and up and up. So they're building new bridges, they're building new ports and facilities, and again, they're valuable until things go the other way. So, what's sure about China is they're massively overbuilt. Whether you look at their TGV, their high-speed rail system that most Chinese can't afford to use. It's wildly underutilized, even with the massive subsidies that they put in. So, this fixed asset, who oversees the fixed asset investment? Profit-oriented businesses or a dictatorial, centralized regime that wants to protect its hold on power? Different motives, right? Different expectations, different returns, okay? Rapidly rising land and residential prices. I think I've got it somewhere else, but in Beijing, the property prices have gone up by about 9 times in the last 5 or 6 years. And then we have problems with these local governments. And this is something that's a bit more abstract, and from afar it's not as interesting, but there's a lot of power in China resides in the local governments, the provincial governments and the city governments, especially in a place like Shanghai. And the way these governments finance themselves primarily is through land sales. Not so much by taxes, but by land sales. And so they go out and they dispossess the campesinos, the peasants, of their land, and then they sell it to a big developer. And because it's, the Communist Party has firm control, there may be some demonstration, but it doesn't change the realities of it. Now, the official understanding of the local government debt is roughly $1 trillion US. Private estimates put it at 20 trillion. No, not 20 trillion dollars, but that would be double, about 3.5 trillion US. In other words, about half of China's GDP in local government debt. Local government, not central government debt, just the local government. Okay? Now, central government debt is not as bad as, say, Greece or the US, for example. But when you throw this in, public sector debt is pushing close to 100%. So there have been these off-budget. So these things don't even appear. These local government financial vehicles, it's an expression that financiers have made up. This is another off-budget, additional 10 to 15 trillion yuan. So another $1 trillion or so in there. So there's some serious imbalances. What cannot go on forever will not. Investment-driven growth in China, I call it economic death by overcapacity. This is the malinvestment story. So, what should drive growth for stable, long-term economic survival? Entrepreneurship and savings. Entrepreneurs depend upon real savings that are available in an economy. This is what gives us sustainable growth. In China, in the US, it's paper. There's no underlying fundamental economic realities. In Greece, it's IMF funds. It's $40 billion from the Dutch yesterday. Why do the Dutch have to give them that money? it's more pieces of paper being thrown at a problem that can't be fixed by throwing pieces of paper at it. So, whatever cannot go on forever will not go on forever. Marroquin didn't pay its electric bill. So, okay, so here's some indicators. I've got 3 graphs, and you won't be able to read them clearly, but you'll get the idea. So, the high rates of growth of money supply. So we've got currency in circulation, that's a piece of paper. The narrow money supply, M2. There's not many more pieces of paper, but there's a lot more credit going through the system. This was, the second one is Beijing land prices. They're up by a factor of 10. Okay, so we see this sharp increase. Surprise! All this new credit being thrown into the system. And this is the ratio of housing prices to GDP. This is the U.S. Okay, here's the U.S. housing bubble. Okay? So, the housing bubble was pretty serious in the U.S., right? But relative to GDP, it wasn't that great. Then we look at Japan. So Japan's 1989. Okay? So Japan had so China's very close to what Japan had in 1989 in terms of the residential property values relative to GDP. This is an indicator to me that there's some serious problems. I hope my battery doesn't die on me. I'll blame Sergio for it somehow. Okay, fine, I'm going to finish here.
I'm looking over you, so.
He always causes problems. I don't know why. Try that there. I don't know. Where's John?
Okay, I think that we will have an
Okay, anyway, balance of payments deficit. I mentioned that a moment ago. No. I know. Okay, fine. Thank you. Balance of payments deficit. Oh, sorry, I lied. It was 12 billion. What I said 80 billion. I guess because I wanted to make it more vivid for Guatemala. The first since 1998. It's a long time. Now, it's small, but if it's the beginning of a trend, which I suspect it will be, why? Why would a balance of payments deficit be? It would mean that the rate of increase of exports is going down. Europe is in a recession, we all know. Japan's gone back into recession, we all know, as of last week. Again, it's like the regularity of Japan going into recession has been giving me headaches since 1989. Okay? The U.S. is, they lied and said that we're in a recovery, but the U.S. isn't in a recovery. 1.5% is not a recovery with roughly 8% unemployment. This is crazy. So, China may still be able to export, but it's going to be exporting less, and we'll see that with the Eurozone alone collects about 40% of the total exports. So that's going to be a big whack-off of China's ability. So trade surpluses that have been occurring in the past are an essential component to the China story. Now, what happened? When you have trade surpluses, you have rising foreign exchange reserves. And so when they sell, as they do, they sell in dollars. Most international transactions are in dollars. They get the money back. They convert it into renminbi because that's what in fact, the companies have to. Chinese companies cannot hold foreign exchange reserves. They have to turn them over to the central bank. The central bank gives them renminbi. The central bank turns around and tries to sterilize them with bond sales, but basically what we see, you get more liquidity in the banking system, which allows these state-owned banks. Now, you have to remember, China's financial sector is dominated not just by the banking sector, but the state-owned banking sector. But private capital in China is a tiny, tiny percentage of the total financial sector. Even the so-called private banks that are well known to outsiders are substantially owned by either local governments or, in one case, by the International Financial Corporation, which is part of the IMF, which, by the way, isn't private. They're a bunch of bureaucrats and diplomats who seem not to understand economics very well. So this liquidity has allowed the rolling over of these bad loans. The bad loans are these loans that the state-owned enterprises will never be able to pay back because they're inefficient, they're producing goods and services that people don't want at a market price. So when these trade surpluses begin to shrink or disappear, there'll be less liquidity so that these bad loans will surface. And this will cause significant problems. The money supply measured by M2 is double the size of GDP. Foreign exchange reserves are about 22% of GDP, so that the money supply is about 4 times greater than the foreign exchange reserves. Just to give you an indicator here, what was going on in the Asian economies, the East Asian economies, before 1997, Korea, Singapore, Indonesia, Hong Kong, and so on. They were looking at about 35% of domestic GDP, whereas in China it's 4 times greater. So this is significantly more imbalanced in China than it was anywhere else. And this is before they went into their plummet. The decrease in the rate of increase in exports and GDP growth I mentioned before. What we're seeing is that China, they got a big push from that stimulus in 2008. But what we see is that bubbles have this way of, like everything in economics, they're decreasing returns. You need an ever larger input of stimulus money to get the same amount of results. So this puts more air and more air. So now, the good news is I've been wrong about China. I've been predicting this for a long time. So maybe I'm still wrong. What I mistook, and my mistake here, is that I could not have imagined the degree to which the American Central Bank would misbehave on one side. And I didn't anticipate how stupid the Chinese would be to keep taking all of that liquidity on in the form of foreign exchange reserves. I couldn't imagine that. When the foreign exchange reserves of China hit $1 trillion, I went, it's terrible. And they were going, oh, look at us, we've got this great economy. I'm going, no. Kept sending them love letters saying, hey guys, you need to do something different. Here's the story. They never replied to my love letters. They still don't, because they're listening to Keynesians and monetarists, the mainstream economists that are giving them models that are telling them to do the wrong thing. Or they're telling them what you're doing is the right thing. Just like Ben Bernanke has got this army of economists that every day put out press releases, articles, scholarly articles, explaining why everything the Federal Reserve System does is right.
Is that what you call those economists?
Pardon?
Is that what you call those people?
Well, that's on their diploma. So, but this is scary. Question there first? Okay, don't mind.
If you would make at least a similar analysis of Taiwan's economy, with which Guatemala has a very strong trade exchange, do you think that you would gather trades similar to those of continental China?
No. I think Taiwan is in less of a perilous condition in that regard. They also have substantially large foreign exchange reserves relative to GDP, but nothing like this. And they don't have the other sources of imbalances, including state ownership of industrial production. Most of that's gone by the wayside. So China's economy is more entrepreneurial. Taiwan's economy is much more entrepreneurial and is therefore more sustainable. Most of Taiwan's economic growth was driven by domestic savings. So they had this firmer foundation, I believe, and this linkage and understanding of that. So something I should have pointed out, I gave an interview to Prensa Libre today, and I was thinking, said, what should the relationship be between Guatemala and China? I should have said, well, maybe more with Taiwan and less with China, because in the longer term, if you become dependent on China the way Argentina has been for its growth, economic growth, it's going to disappear. A lot of it is.
I was wondering if you were familiar with Allen Kianqian's study on China.
Who?
Allen and Kianqian.
I don't get that, sorry.
It's a 2002 paper from
Yeah.
Allen and Kianqian. There are three guys from Wharton.
Yeah.
And I want to read you something that
Okay.
might suggest why it hasn't burst the bubble.
Yeah.
They find that the informal sector in China is the one that is growing the most. And let me read you. This is more importantly, the growth in the informal sector, where applicable legal and financial mechanisms are much poorer than those in the formal sector that includes state-owned and publicly traded companies, is much faster than that of the formal sector.
Yeah.
And we believe that the system of informal mechanisms and institutions plays an important role in supporting the growth in the informal sector. So what I'm suggesting that maybe this might be a reason why there is some growth, actual growth from entrepreneurial action in the informal sector that is behind most of the growth that you are observing.
Yeah, and you know, but the tragedy is there that the informal sector, as in every country, is limited in its capacity for individual enterprises to grow because they won't get access to capital. Number one, in China, because they're private, the money goes to the state-owned enterprise. Number two, because they're informal and they don't have, you know, ownership rights or whatever. But I suspect that there's a great deal of that.
And I was wondering, do you know if Japan had an informal sector growth also? Because it seems to me that it was basically the formal sector that grew during the miracle.
Well, again, I think, you know, the informal sector in China exists partly because the focus of industrial production is on what the government wants to produce instead of what the consumer wants. And so it's a perfect opening for the informal sector to say, well, we'll produce what the consumer wants. So that's what, whereas in Japan, it was a much more market-based arrangement.
What about the United States?
What about?
The United States, do you think Obama will keep for the second term the same fiscal policies that he had developed during the first term? Then where the United States are going to be? Or how they are going to end?
You know, maybe I should have said that I think the whole world is in a bubble created by the Great Saving. We pump so much liquidity into the globe. And again, but we're not alone. The other central banks pretty much went along for the ride because they said, well, the gringo's doing it. It must be right because they're the best, they're the biggest, you know, they have the best economists, you know. So they all followed them. So when the U.S. interest rates went down, everybody else followed. So we're in big trouble. And the only reason, you know, Bernanke says, oh, we're keeping interest rates low because we want to stimulate the economy, we want to lower unemployment. No, it's so the U.S. government can keep running these exceptionally high deficits. This is crazy. This is crazy.
What if you don't believe in hurricane behavior? How about the elections?
Well, that's not in economics.
Well, I'm not an economist either. My degree is in engineering. So
Still, I have one question. Without such big deficits as American government are running now, how can the United States pay for the wars that they have been?
Exactly. Well, you know, this is the interesting thing that happened to the anti-war left. If you look at the anti-war left during the Bush administration, they filled the streets. And now the anti-war left, because they're heroes in office, there is no anti-war left. There's no left-wing opposition to the only people that oppose America's global adventures are the libertarians.
Ron Paul.
Ron Paul and libertarians like me. You know, because these things they're not only ruinous economically, but this is why people don't hate America because we're free. They hate us because we blow them up with drones. We support their enemies. Why wouldn't they hate us? I mean, our foreign policy and our military adventures they're ruining the economy, they're ruining the U.S. reputation, and Obama, despite being the Nobel Peace Prize winner and all, he has no interest in prosecuting peace. None of them do. I'm not sure Ron Paul would have been able to, because the bureaucracy would have smothered it, even if someone like that had become president. But at least he would have had his heart in the right place.
You mentioned that there were like two alternatives to make China's economy sustainable, and one of it was entrepreneurs, right?
Yeah.
I just want to know your position.
And savings.
Yeah, but I want to know your position about one special case. In France, for example, during my PhD, we did a study about the low number of computer scientists that is increasing, right? There's less and less people studying computer science. And one of the reasons happened to be that this outsourcing that is making France more competitive because they are buying developed software development at a better price that they can produce themselves. It's a good thing and etc. So they are studying other things, okay? But this lack of computer scientists is lowering also the expertise of the people because they don't have computer scientists anymore, and those who finish as a computer scientist, they are not happy because they are hired to be programmers and not computer scientists. The computer scientists of the French territory are in China. In this case, how can these entrepreneurs can help the situation? Because in one moment, China will not be capable to satisfy this demand at all.
Yeah.
Because of two reasons. One is the one that you just said, and the other one is because this artificial market cannot stay at the same price. And the reason why people like French people are buying technology from China is the low price.
Yeah.
So,
Yeah. Well, I think the good news and the good entrepreneurial news is that there are lots of jobs for computer scientists in India. And what we're seeing is a lot of, now when I go to Bangalore, I see a lot of European, well, white, Caucasian people of European descent, that are going there because that's where the money is. So they need that talent there, because in India, the Indians are supplying some of the lower level outsourcing, the grinding sort of thing. But they don't develop the really good computer scientists like they might in parts of Europe or the United States. So the young people who are being dissatisfied, if they're willing to move and want an adventurous life, and I tell you, Bangalore is a wonderful place. All these big Indian companies are going and offering jobs to them. So there's a way out for them.
So I study entrepreneurship, and it always bothers me when people just say entrepreneurship is a solution, because there's the empirical work on it, there's different kinds of entrepreneurship with varying effects on the economy. This is where I start worrying about China. And my brother works there in a startup, and we talk about this a lot. What we call small business development, so slower growth industries, typically don't have a big marginal increase in GDP in terms of their effects. And they pretty much destroy as many jobs as they create on a year-over-year basis, on a 3-year rolling basis. It takes about, even in the US, you have to found about 90 firms before you get 10 permanent jobs. But there's a very small sector of extremely high growth, scalable model firms that by and large founded by entrepreneurs with 10, 15 years of expertise in an area, in attractive markets and industries with high barriers to entry, and also high capital needs. And this is what I worry about with China, because there's no strong rule of law. The IP rules are very poor. Because of the wealth disparities, there is issues about accessing venture capital. In a lot of ways, there is essentially no private venture capital market. It's all done under the table. And so I worry that as entrepreneurship as a solution, because it's never as easy as just encouraging that. You actually have to encourage a very specific, rare, and difficult form of it to achieve this kind of growth. The U.S. has been able to do that because we at least, even if you don't like our monetary policy, we do at least have strong rule of law, et cetera, et cetera. But that's not true in China. So these socio-political and legal institutional issues that I just see some. I agree with you. I think it's going to explode, but I think it's going to explode in a very different way than other countries because of these differences.
Well, let me say, first of all, if I gave the impression that I saw entrepreneurship as a magic bullet, that's far from what my own thinking is. What China has to do is really policy oriented in terms of less emphasis on export-led growth, allowing the state-owned enterprises to fade away, to end exchange rate controls, end capital controls. All these things will lend themselves to creating a much more balanced economy, and that's more important. Now, so in that sense, for me, entrepreneurship is, in a sense, a side issue, and will, not be what I would consider the primary way for China to solve its massive imbalances.
I went to that. That's the point of the article I was mentioning. That I just mailed it to you because they are exactly finding that China has to use private governance mechanisms to substitute for the lack of rule of law and so forth. And that's a kind of a conundrum because you do not have institutions, and yet you have growth through the informal sector.
But that's not durable in the long run. I mean, that's the classic case. You go back to the Middle Ages and you find that people use trust as a substitute for rule of law, and they use guilds as a substitute for contracts. But because you can't keep track of more than about 150 people in your head that you trust, those networks can't expand to the level that we have.
Well, the Chinese have a system they call guangxi, which is these connections that they are based upon family or historical linkages or whatever. And these are very extensive. There are a lot of studies on this. It's very impressive. And these kind of informal institutional arrangements always emerge in the vacuum that is left by the formal institutions that don't meet those requirements. So this is how, otherwise you would say, well, private business couldn't exist in China. They have this informal banking sector where they don't go to the banks because, number one, the banks aren't loaning to them. But number two, it's where you can get funds. You get funds from somebody that knows somebody you know. And the reason you get it is because of that connection. And there's not a co-signing explicitly, but the fact that you know someone is as though they co-sign.
Informal economy.
Yeah. But it tends to work quite effectively in absence of the rule of law.
Well, in the short run, in the long run,
well, I mean, these things have been operating, and also in other parts of the world, in the Islamic world, where they have these informal banking arrangements where you can deposit money in one country and then your counterparty gives the money in the other. So these things survive very long periods of time. I think China would be better off with more formalized rule of law systems, but these things have worked quite effectively. And they work not only in China, but wherever there are Chinese-speaking people. It's saying that if you're in the Philippines, all the banks are basically owned by Chinese families, ethnic Chinese. And the people who get the loans are ethnic Chinese. It's one of the reasons the Philippines doesn't grow very rapidly, because the ethnic Chinese are a small portion of the population.
Can I ask you a personal question? Have you been debated a
Have I been?
lot about this subject? Because you said that you predicted many years ago.
Yeah.
And like maybe 4 years ago, I just suggested that Chinese people couldn't state that offer the same prices, and that eventually what's going to change. People laugh at me.
Yeah. Well, I don't know. I guess most of the people are just sort of interested in what I hear. I don't get a lot of pushback. But like I say, the Chinese government doesn't like what I say.
Did I mention that I was saying this in France?
I'm sorry?
I was saying this in France.
Oh, okay.
So.
Okay. Yeah. But it's an interesting problem, though. I mean, as I say, we have reached the point in the world, not just in China, but the global fiat money system. We've never had this before. Before 1971, there was either a dollar-based system or a gold exchange system that supported the dollar, that created a limit, that imposed a limit on the monetary malfeasance, the monetary misbehavior. But we don't have that anymore. And look what these guys are doing. 0 interest rates? Who could believe? I mean, I just find it stunning that this passes as something that makes sense. You would have been absolutely failed out of a graduate program in economics for thinking about it, much less saying it made sense. But now, these guys, well, we have to do it. No, they are doing it. And the problem is, these are political decisions, not economic decisions. And political decisions mean they'll put it off until it blows up in their face. This is what scares me. This is why I think the Chinese won't do what I keep telling them they have to do. They won't allow, inflows and outflows of capital. They won't allow the renminbi to float. They won't allow the banking system to become rationalized. And of course, where do they have a model? I mean, I used to complain about China. I said, interest rates have no economic meaning in China because as long as you have these state-owned banks. But we've got private banks in America and interest rates make no sense because the central bank is pushing down short-term interest rates and buying up assets to drive down long-term interest rates. This is crazy. We've never been in such a really perilous situation. This makes, for me, 1929 look like a walk in the park. I mean, the imbalances in 1929 were nothing like they are. These are global on a frightening scale. The stupid gringo sitting on $15 trillion and more and more and more of debt, and Greece-style obligations in the future, where your obligations are growing at a more rapid rate than your tax revenues, your possible tax revenues. The only way out of it is massive default and or massive currency depreciation. But we saw what massive currency wars in the past led to military wars.
What do you think about tax policy as at least ameliorate the situation?
There's no country in the world that has a problem with taxes. They have problems with spending. Now, I, as a citizen, am unwilling to countenance or consider paying 1 penny more in taxes until governments show me that they can cut waste, cut inefficiency, and stop spending in things that they shouldn't spend money on. Like in Guatemala. I mean, what? Why should you pay more taxes? You have good police, you have good public schools, you have good roads. What? Wait a minute. Why should you pay a penny more? You're not getting value for what you're spending already. And the United States is the same. The United States has a spending problem. Now imagine, 10 years ago, we did not have a massive deficit. We had much less debt. Were Americans starving? Were there riots in the street? Now, all that new spending didn't make America better. And we weren't much worse without it. What it did was create either payoffs to political supporters of either the Republican or Democratic regimes, or corporate welfare, or social welfare spending. That has not made people discernibly better off. In fact, we're worse off. We've got 8% unemployment, despite all of that.
So the future of Greece is the future of us all.
I'm terrified. I mean, when I was young, I was fighting Marxists. That was fun. I could be optimistic. We were doing Now we're fighting insanity in central banks. One definition of insanity is doing the same thing over and over again and expecting different results. Japan's had a zero interest rate policy on and off since the mid-1990s. Japan's central bank has had large-scale asset purchases since the middle of the 1990s. They've never recovered. The United States is doing the same thing, and it's working. The thing you have to understand is that central bankers have one metric. They look at consumer price indexes, okay? And they also help arrange the definition of them. So if it's too high, you redefine it so you keep the consumer price index from being too high. So they say, as long as that's okay, we're doing the right thing. It's only when consumer prices get out of kilter that they say, oh, we need to change, we need to raise interest rates or whatever. But what happens when you inflate the money supply? Well, the mainstream economists say consumer prices can go up. But the Austrians say, well, that's one thing, but then that's not really that interesting. I'm concerned about relative prices, because this is what Austrian economics teaches you. Price levels really don't mean that much in terms of entrepreneurial activities. Entrepreneurs react to relative prices, not to price levels. It's a different thing. It's an aggregated